good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, and we're here now on Wednesday, the 5th of April, 2023. Now, I'm putting this out very early. It's just around 4 o'clock in the afternoon. Why? I've got Passover. I have Good Friday to celebrate. I have Easter to celebrate. I got family. I got dinners. I'm sorry. You got to do what you got to do. But that tells you something. I'm not the only one going through this, all right? There are people traveling all over the country to be with families. The volumes generally gets a little bit lower. The markets in the stock markets are all closed on Friday, yet we're going to get the jobs data report. Figure out the wisdom of the government in doing that. It's weird to me. We are open in the futures, however, into the morning. I've sent out the hours to all of my subscribers and my clientele for brokerage. So they've all got the trading hours. You might want to go look for them somewhere on the website. I don't want to just keep sending things out and bothering you. So we're getting a wobble. What do I mean by that? The JOLTS data was the first piece that started to show us, the job offerings are starting to really fall down. There's not as many as there were. Today, we had other data that came out showing some production, showing what's going on in parts of the service industry. And there, too, we're starting to see a bit of a pullback. Now, in order to really know if this is grabbing hold, you have to get into Friday's jobs report. That is where you're going to see right away. It breaks down the category. Where are people getting hired? Where are they being let go? What is going on? You know, if you're watching and you're a stock trader, that it's company upon company. You keep hearing they're letting people go. That's the way the big companies get to a better earnings. They get rid of the permanency of a strong salary in multiple. And that's what they do. They can only go so far in raising prices. They don't have that much control over raw materials, as you can imagine. So they do what they can do, and they're fighting something else. They're going to fight high energy prices. All right, that's going to show up in any way that you ship goods, one way or the other. So there's still that inflation scenario out there. This is an important week, and I hate the fact that the markets really won't have a chance to properly dissect the report on Friday. Tomorrow's the unemployment claims. Challenger Gray we get tomorrow, too. We had today, by the way, ADP. I knew I forgot one of them in my brain there. And ADP, much lower than the market thought. I think they came in the 140,000 private placement. Market just a while ago was well over 300, then 240. They were looking for 210 for placements. Now they got 140. So you can see things are slipping off. When you look at the S&P for the week, you're down 0.5 percentage point. So basically, we're in a stall. We haven't gone up. We haven't gone down. When you take a look at the action through here, yesterday you had an outside day to the downside, and you're getting follow through. Do you know how to work with an outside day? If you go to my website, iraepstein.com, under the word education, there's a course waiting for you called Outside Days. When you take a look at the micro mini S&P here with the swing line study, and the one thing I'm going to do this year is I'm going to redo my charting course. I like to redo it often being every 5 years, 6 years. It doesn't have to be done more than that. But I'm going to start doing that. I'm going to be doing, I'm married in front of my video computer right now, and I'm looking for things besides special reports to do. And that'll be one of them. I'll do a chapter here, a chapter there, in no time at all. I'll have the whole course redone. And the reason is now that I'm doing ETFs and stocks for you, I can mix match, and it'll be a lot more fun too. Higher lows, higher highs. I wrote this swing line. No, my son's 38. So I wrote it when he was 13. 25 years ago, I created this study. And it was done as a lark. I said, I can get you with my friends, we'll go to dinner. I'll bring out a chart, because a lot of them are traders and so on. You can look at any chart you want. You tell them if the market's in an uptrend or a downtrend. And what I did is I taught them how to connect lines. It's that simple. There's 5 rules. You will learn them, and boom. And what you're looking for is what the traditional person, if you're watching financial TV, talks about. Hey, John, we're having a period of higher highs, higher lows. Or no, we're still making lower highs, lower lows. We got a bear trend. Or John, we're making lower lows, higher highs. There's really nothing at work here. Well, this is what it did. And you can then turn to somebody and say, hey, if I buy the market here, what number do you have to get under to break the pattern of higher lows, higher highs? It's listed right there for you. Now you know the amount of dollars at risk as well. It's one way to work with it. Then I put filters on it. Now, what did I tell you the other day? I said to you, we've had a bullish crossover where the 18-day average in red just got over the 200-day, and it's probably on its way to trying to challenge the 100. This will end up being a big support area. Do I know if the market's going to go back down there? Well, I'm not a magician. That I don't know. But I can tell you where the resistance is. It's the upper Bollinger Band. I'm going to repeat this over and over. Learn how to work with these Bollinger Bands, and especially the moving averages and slow stochastics. It is beyond important. If you had to do one thing in trading, I would call this it. More so than chart patterns, more so than the others. Why? Because it's telling you, why am I buying it up here? The only chance of that going higher is it's 5% of the time. And if I look back, it doesn't do that too often, does it? They build Vegas with guys buying over that and guys selling under the bands. That doesn't mean you can't move back into the band and make a lower low, but not there. You're trying to get your edge, the right spot that you think to come in. What I will tell you is, in my opinion, it's never the right spot to buy over a Bollinger Band and never the right spot to sell under one. Got it? The word never sticks. That's where I'm from. So could it come down there? It could, but guess what? You've got an embedded reading. Embedded readings often mean that you're using breaks just like this to get long to see if the market goes back up to challenge the Bollinger Band. It's a failure if the red line closes under 79. Today was one of those days, if you were watching, I think traders should have been buying today. And it was a hard day. It was gut-wrenching. I'm looking at it going, oh, man, here we go. I guess I got my clients into trouble. And at the end of the day, it wasn't so bad. Doesn't mean that it'll be right yet, but we'll see what happens. In the NASDAQ, which has been the strongest, you got a reading of 79.47. A reading under 79 is terrible. Now, there's a trick to this. When you close near the low of the day and you're already losing the lower Bollinger Band, the odds are beyond strong. You're going to lose the band in the first thing in the morning. So do you want to take a position like that home? Well, that's up to you, not me. I teach it in my course. In the Dow, there's something happening. People are coming out of the NASDAQ and they're trying to make this develop a bullish embedded reading. Now, I would never tell you to buy a Bollinger Band and a 100-day average. This is big resistance. This is where professional money should be coming out, not into the market. But if it embeds, give a break, and I think they'll buy it again to see if they can poke through there. So, what's the battle and why is this happening? The battle is this. If the economy is slowing down and finally, and we know the economy's been slowing, but finally the service sector joins in, the naysayers, as I've named them, will say, hey, the Fed can't keep going higher and higher. What's going to happen is they'll get up to a point, a terminal rate it's called. It could be 5%, 5.25%, 5.5%, whatever it's going to be. And they're going to go from there and pivot down. Well, number one, they just don't go up and pivot down. I've never seen that last, all right? That was an experiment Volcker tried, and it ended up absolutely as a disaster. You know that. Go back in your history. This Fed chair talks about Volcker. He knows not to do that. So at best, what I would expect, the best, is we pause, and the market waits for maybe 3 reports. And on those 3 reports, you're looking to see, does it build in? And then the Fed says, okay, I don't have to go anywhere. Do I think that they'll pivot down? The data would have to be in the United States pretty darn bad for the Fed to pivot. What they'd rather do, I'll bet on this, and I am betting on it, that's your futures broker, is that they would sit pat and let the weight of that high rate push on the market to get them towards that 2% inflation goal that they want. Did you see Miss Meister, Loretta Meister, the Cleveland Fed president? She was on this morning. It's exactly what she said. She expects them to go over 5%, she doesn't know how high, and sit there indefinitely, letting the weight of that carry the market down. And it might take, in her words, not mine, till 2025 before you're at that 2% number. Now, does that mean that the Fed would have to sit all of 2024 and do nothing? No. They could pare back, but they'd let the weight of a relatively high rate weigh on the market. That's what she said. I'm giving you the paraphrasing as I've got it. Could I be wrong on what I'm saying? Of course I could. Do I think I am? No. When we take a look at the Russell, where did you go to? You made your run at the upper Bollinger Band. You've pulled back to neutral, but you're not trending. You have a lower low, higher high, nothing market right here. In the bonds, you're back up to the upper Bollinger Band after narrowing in quite a bit here, but no real days that you did that. I don't like that. Generally, when you narrow in, you will spend some time against the 18-day average bouncing back and forth. This is different right here. I'd be very concerned about that. The market got up to 134.7 today, which means I don't have these arrows pointing down. I could have a blue arrow up here. I've got a higher high and lower low scenario in the market. 5-year notes in an uptrend. Tell me where the market stopped on the rally. That's why I want you to learn Bollinger Bands. Where'd you stop in the dollar index, making your run down there? But you're developing an embedded reading. If interest rates are going to stall out, why do I want to be long the dollar? It just doesn't make sense to me. The other part of that is if the economy is slowing down dollar, I still have foreign currencies that probably have to go up in rates more than ever. You'll say, what's he talking about? What did OPEC do? How's that going to affect European inflation? They got a real problem there, right? At least we're semi-self-sufficient. Under the Biden administration, we could have been 100. They blew it. Trump had the right idea. He blew it for us. Now he's trying to get areas of Alaska and so on to do it. What you need to do is get the Permian Basin boys rolling again. That's really what you're going to take. And if they do that, by the way, what commodity comes about that you get an excess supply of? Little bit of science here. Natural gas. Just remember that. All right. If we look at the euro, didn't hit the upper band, embedded. These pullbacks until things change. I think the pros are going to buy the euro, sell the dollar. If you lose the embedded readings, I think they walk away from the trade. But until then, I think they're very comfortable with that. Yesterday was the first day you hit the British pound, and today from that number, down pretty good, as you can see. I don't see anything right now in Bitcoin other than what? The sideways action, flirting. The word is flirting with losing? No. It lost its embedded reading. So today is the day you have to be out of Bitcoin. You got the settlement under 79, and it was a nice way to let you out. Here's the thing I love about the work with the slow stochastic with this. More times than not, even if you're wrong, it lets you out as a gentleman or a woman. It doesn't just rip your head off. I use the word more times. That's not every single time. I wish it were the case, but more times than not. And remember, momentum leads price. Just think about that, all right? Is it every single play? No. Is it most of them? Yes. How do I know? Go in and take a look at your slow stochastics, reach your own conclusion. I believe in what I'm saying. We're suddenly stalling in the differential between oil grades, as you can see, and you're up to a big resistance area. And I know you're going to say, Ira, buy this, it's going to 100, and it may, but it's not going to do it with me. I would never buy a Bollinger Band, ever. Not going to happen. You're not embedded. This is where I'd give you that rib in the side. Got to take some money off the table if you're long. Same thing in WTI. Embed and I'll change my colors. Now, gasoline. I put out a special report that I thought we were bottoming. I wish it would have given me a little more time. I didn't expect that OPEC was going to do what it did, but ever since they did, it pushed the chart forward is what in essence happened. You're seeing that our own supplies are falling as expected. Now you're getting to the point, remember, we've gotten into the point now where the turnover from winter grades to spring, summer grades has happened. You're drawing on supplies, not building them and heating oil and distillates. And you're seeing that in the API and EIA numbers. Natural gas. If you lose the embedded reading by closing over 21, I don't want to be in it. But if the market on this, I think the pros are going to probe it. Do I think they did today? No. Today was an outside day up. When you take the enhanced Bollinger Band course, you're going to learn a lot about that. Got it? So two things. Number one, if you like what I'm doing here, put a lot of effort into this for you, please give me a thumbs up. Number two, if you want to learn how to work with the momentum, outside days, with what I call an enhanced Bollinger Band course. This is classic right in front of you. Take a look at this and educate yourself. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.